afternoon and good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will be taking a look on the Bell-Williams indicator. In yesterday's session, we had finished off with the start points, and now that we are done with most of the basic components, we will be moving on to the indicator part. We had done the indicators overview, and now one by one, we will go through most of the indicators which are available for algorithm development on the Visual JForex platform. So today we start with Visual JForex indicator section, in which we will take a look on the Bell-Williams indicator, and then as the time will progress, we will cover other indicators like moving averages and mathematical components as well. So let's get started. We have to go through this listing. Here we will be taking the sequence as per the listing here. So in today's session we will see Bell-Williams, and in Bell-Williams indicators we have these 7 indicators listed. You can see there is AC, acceleration, deceleration, oscillator, alligator is also a very useful indicator. Then awesome oscillator, BWMFI, Bell-Williams money flow index, the fractal, gator, and the Williams R. So in today's session we will see the description, the functions of the acceleration, deceleration, and the alligator. Let's start with the acceleration, deceleration, oscillators, functionality. Here you will find there is always a brief description, not always, but in most of the cases. When you take any block and if you click on the info point, then you will get this brief description where you will see its underlying logic, what is the function of it, how it is going to be calculated, and how the output values will be generated, and the input parameters. All that information is given here, so you can go through this info section for any particular indicator of your choice, or you can do a bit of search on the internet. You can do that as well. So here, if you consider the acceleration, deceleration oscillator, this is a technical indicator which tries to measure the acceleration and the deceleration of the momentum in the underlying instrument. So here you will have the change happening in the direction of the trend before the actual driving force for the underlying instrument changes. So this is a fairly useful indicator, and you can define it very easily, not much complexity involved if we consider its input parameters, the input values. So here you have to define these 5 input parameters, and then you will have these 2 output parameters, the output values positive 16, negative 16, and depending on the kind of setting you are adopting, here it can be calculated on the bit side or on the ask side. So it is always up to you. And we also have this applied price. Applied price, I will explain to you on the chart, is the price on which the calculation will happen. Here I think one of my algorithm has placed a trade, as we have these few algorithms running on this demo account. And now that we have to consider the acceleration, deceleration oscillator, we will need to add it. And here this AC2 is our instrument of is the indicator which we need to consider. So here you can see acceleration, deceleration oscillator has been added to the chart, and we will increase the zoom so you can see values in a better way. Now here you have this acceleration, deceleration oscillator, and we have to consider how the change in applied price changes the output values for the indicator. And what we will do here, we will take out this position info. Okay, so now we have a clear cut view of the price action as well as the indicator output here. So here you can see that this acceleration deceleration oscillator has been added, and if you want to edit it, then you can choose different values. So here the price is the closing price. Now if we change it to the median price high low divided by 2, you will have different output values. So let us for example consider the output value for the last hour, and the output value was minus 0.00083. Let's try to remember that, and now we change this applied price to the median price here. Okay, and as you can see, this has changed the last hour's value. Now we have this different value minus 0.0057, whereas earlier it was minus 0.00083. So it makes all the difference. So depending on the kind of input values you are choosing, the input parameters, you get different outputs as well. So that way you have to be fairly careful while dealing with these indicators functions. Now when you go for any algorithm build, when you are working on any development of the algorithm, you have to choose the upper side, the first ask or the bid. Suppose if we are going for a ask, and I would here also show to you how we get different values. So here you will see again the value has changed for acceleration deceleration. Now as you can see, it is minus 0.0075, and on the bid side it was a bit different. So all these parameters need to be paid attention, and it need to be defined very well, so you can apply different prices. So here I would explain to you the example of the closing price. So on the chart you will be able to understand which kind of applied price you want to go for. So here if we are going for a close price, then we have different values here. And now let us again change this to high price, and now if we make the change on the chart as well, edit indicator, close price is changed to high price, and again the value has changed. Now we want to change it to low price, you can do that. So here we have low price. Again as you can see, the value has changed, and now we have minus 0.00063. So here depending on the setting you are going for, you will have different values. So typical price is one more option given for this indicator, and let us try that as well, and it will be typical price. So here you have different value this time as well. This is a typical value. So I'm trying to explain to you that whenever you are defining any indicator, any parameter, you have to take into account the difference which will be generated on account of that parameter. So you need to be fairly careful while determining which kind of price and on which side you want to go for. It is a offer side, or it is a ask side, or it is a bid. And then, as I said, the applied price also makes a lot of difference. Now, if you consider the acceleration, decelerations, input values, here you have to choose the default value, then the time period. Now it is here given for 10 minutes. Suppose if we make it of 10 minutes, so advance is used from the chart. So if you want to take a look from the perspective of 10 minutes, then you have to choose this way. And now here you have these different I think it has not changed. We have to change it to use from the chart. Time period needs to be also set at use from the chart. So as you can see here, we have now the different values. The change in direction will happen as per the underlying instrument's defined time period. Now that defined time period is of 10 minutes, we will have these changes happening in the underlying trend as and when there is a shift in momentum in the underlying instrument's value, the price action depending on the time frame. So that way we can use multiple different values at different point in time, and of course our major goal is going to make the trading algorithm profitable. So you have to see which kind of time period is going to be suitable for you. If you want to go for half an hour, that is also a possibility. If you want to go for a day, that is also a possibility. So here you will have these all sort of input values, input parameters, which can be defined very well. And here you can define different parameters, different input values, starting from the 10 seconds to monthly. So this is the time frame. Now the shift is the look back period. So suppose if you want to go back in time and at any point you want to know what kind of output value was there for the acceleration deceleration oscillators, say 5 hours back, then all you have to do is go back 5 hours with the use of shift 5, and you will get to see the prevalent value at that point in time. And here I think this time is 5 candle period back. So here when you use a shift 5, it will go back in time in multiple of 5 of the underlying instrument's time period. So suppose it is defined for 10 minutes, then it will look back the 5 candles of 10 minutes each. So we will have the data which was there 50 minutes back. So that's how it's gonna work. And shift is going to play a major role in getting us the historical data, being able to retrieve the historical data. Then moving on to further two input values, the fast period and the slow period. These are actually related to the functioning of the acceleration deceleration, and they go on to these values go on to determine the calculation for this particular indicator, the acceleration deceleration. Suppose if you want to make changes to that, you can do that, but you will get different values. And here if we want to try it, we can try it. So here now the fast period and the slow period has been defined at 16 and 34. So let me see here how it has been defined. And so here fast period is defined for 5, slow period is defined for 34. So we do have to make changes and the chart should be defined for 10 minutes each. So now the time period is defined for 10 minutes each, but these acceleration, decelerations, input parameters are not well aligned with the Visual JForex platform's default values, so we have to make changes. And now, as you can see, here we have got these acceleration, deceleration oscillators with the defining input values of 5 and 34 for the fast period and the slow period respectively. So we have these blocks, and I think given the time constraints and also to make it fairly easier for you to understand and grasp the particular indicator in its totality, and also to work with it in today's session. You can do a bit of experimentation as well. So we will cover one indicator every day for next couple of sessions, and then we will move on to building the algorithms on the Visual JForex platform with use of these indicators, which we will be well familiar, and then we can even strive to build complex setups using different parameters and as per our requirement. So here I hope you have got fair bit of idea of how this is going to function, and I think we also have to consider output values in I think I forgot to include the output values, and output values, of course, are of significant importance. And without output values, you can actually never build a profitable or even loss-making algorithm. So for that, what we will be doing when we will be building the algorithm is that we are always taking a look on these output parameters. Now, when I mean we don't be we won't be keeping a watch manually, but our algorithm will be awake 24 hours, and it will be keeping a watch on the output values generated. So depending on how we decide to play out the output values generated, whether it is regarding the rise, pardon me, or the decline of these output values. Now here you can see that negative value is declining, whereas here the positive value is increasing, and in this case the negative value is increasing, whereas here you can see that positive value is decreasing. So we will have this combination, different parameters, different setups depending on the context of the price action on that particular day. So here we will be able to take these output values and do any analysis which we are working on, and then arrange these blocks. Suppose if we are working with only one indicator block of the acceleration, deceleration oscillator, then we will need to be a bit more careful, as we will have to take those values and then put them under some calculations to derive fair amount of useful data. So that's how it gonna work, and I hope you will be enjoying the sessions in coming days. And of course, in today's session we have just got started, and as the time will progress, we will see more and more indicators which are available for our Visual JForex implementation and the development of our own algorithmic products. So here we now sign it off for the day, and I will be back tomorrow. Have a fabulous day ahead. Goodbye.